Hello friends, we'll be discussing the subscription of shares all cases reiteration in this video. So when we speak about subscription of share, we understand there are three case studies that we have already learned about, that is full, under subscription and over subscription. So this illustration will depict all the cases in one problem itself, so that whenever you have to go through any kind of gist study, you can utilize this problem for your reference study material. So let's start with the illustration and figure out what exactly do we have in this illustration and how do we tackle such problems using the journal entries here. So this case study is about Delhi Artware. Mrs. Delhi Artware has issued certain number of shares, and the allocation price, rather the application, the allotment, the first and the final call amount has been mentioned regarding each of the share value. Now we have to figure out in this illustration whatever details will be given will be mentioned for full subscription, as well as the case study will be mentioned for under subscription and over subscription. So using all three materials, we have to pass the journal entries according to them. So let's go through this illustration and figure out what details have been mentioned related to this thing. So we have mentioned the illustration here. We have to discuss this illustration in brief with you. So as you know that this is related to Mrs. Delhi Artware, who has issued X number of shares. Now those X number of shares refers to 50,000 shares being issued here. The share value of each share refers to 100 rupees. Now this 100 has been divided into the following manner, rather application, allotment, first and final call. For application, it went to 25 rupees. For allotment, it went to 20 rupees. For first call, it went to 30. And for the final call, it went to 25. Now, the case studies that has been given here will have the journal entries according to these case studies itself. Case 1, where fully shares have been subscribed. That means how much ever we have applied for, or rather how much ever we have allotted. That means 50,000 shares have been fully subscribed here. That is the case 1. Case 2 refers to partly subscribed shares. Namely, only 42,000 shares have been allotted, or rather 42,000 shares have been only subscribed here. We had issued 50,000, only 42,000 shares have been subscribed. So this is a case of under subscription. Now case 3 refers to oversubscription. In this oversubscription, they have mentioned certain details here. 12,000 shares were oversubscribed. That means when we had issued 50,000 shares, we received application for 62,000 shares because they have mentioned it was oversubscribed by 12,000 shares. So what we have done is that out of those 62,000, we have rejected 2,000 shares and the balance has been adjusted accordingly. Now how the adjustment has been done has been mentioned here. So for example, if 12,000 shares were additional, out of those 12,000, we have rejected 2,000 shares. And the balance 10,000 have been applied, or rather provided, in the ratio of 1:3. That means for every 3 shares that were applied, 1 share was allotted. That was the ratio that was taken into consideration. Now this, my friend, is known as pro rata allotment. This is not the basic version, or rather this is just a gist of what pro rata it is. I'm giving it to you right now. We'll have an in-depth discussion on this specific term itself in the next few videos down there. But right now, when we are discussing it, let me just give you a brief detail about what pro rata means. So whenever there is an oversubscription, we tend to reject certain shares and we tend to adjust the balance shares within the issued share itself. Make sure it is within the issued share. So hence we have a ratio here. So if you applied for 3 shares, you might just get 1 share as an allotment, or rather as an allotted share from the company here. Now the balance amount that you have already paid, because you have applied for 3 shares, that means you have already paid application money for 3 shares. In such a scenario, whatever additional money you have paid will be adjusted in terms of the allotment or in terms of the final call and first call. So for example, if application money was 10 rupees per share, you applied for 3 shares, that means you have paid out 30 rupees here. Now, to give you a basic difference here, if you have paid out 30 rupees and you're getting just only 1 share there, that means you should have ideally paid rupees 10 as an application money, but you have paid additional 20 rupees. Now, this 20 will be adjusted in terms of the allotment. If in the allotment you have to pay around 10 rupees as allotment money, you don't have to pay that allotment money at all, because you've already paid 20 rupees in addition. Now, in the next first call, you have to pay another 10 rupees. That means you still don't have to pay, because the company already has a credit balance of your money there. Hence, you don't have to pay the allotment and the first call. But if there is any final call which refers to another 10 rupees, then yes, you have to pay only that final call amount, because the additional money has been already paid off. Hence, pro rata is certainly known as, or rather is partially known as, collection of money in advance, because you have already paid for that in the application money. So let's figure out what exactly we need to do in such cases, because in case 3 you will have to do certain calculations to adjust that thing. Now we'll start with the case 1 first. We'll start with the journal entries of case 1. So let's go ahead and figure out the format first. Now, when it comes to journal entries, you basically know there are only 2 categories of journal entries that you have to pass: the due entry, the receipt entry. The due entry and the receipt entry, these are the only things that you have to do. Right now, you're not really aware about different kind of journal entries, although it has been taught to you. But right now, you're not completely aware about how to utilize those journal entries. It may be calls in arrears, it may be calls in advances, or any kind of bad debt entries that we have. But right now, in all these cases, wherever there is any calls in arrears, right now in this illustration we don't have any, hence there won't be any calls in arrears or calls in advance here. But we do have pro rata allotment. So for that case scenario, we have certain different entries that I'll explain to you. But right now we're starting with the case 1 here. So now that we are starting with the case 1 journal entries, that means in the case scenario whereby there is complete subscription done. So 50,000 issued, 50,000 subscribed, at the ends of the story. So let's figure out what are the journal entries that we have to pass. As you know, when it comes to journal entries, we pass the application entry first. That means receipt of money that we have done is the only thing that will be passing here for. So next entry will be the due entry. But in case of allotment, in case of first and final call, everything will be as similar to due first and then received. Only in terms of application, it will be received first, because we receive the money first, and then the due entry. So let's start with that. So now the first entry will refer to receipt of application money. The entry that has been passed here refers to bank account debit to equity share capital. The short form of it has mentioned as ES capital. E stands for equity, S stands for share. So equity share capital has been mentioned here. In terms of the application money that we have received on the basis of 50,000 shares being issued. So 50,000 multiplied by applied shares, or rather application money. So as you've seen, we have mentioned 50,000 multiplied by 25, that refers to 12,50,000. Now, this same amount will go to equity share capital account, or rather, if you can see in this entry, we have already mentioned that specific thing. That means this amount is directly going to equity share capital account. Now, the entry that we have passed here is the combined entry. To give you a bifurcation of this entry, rather I can tell you about, the due entry will be equity share application to equity share capital account, and the receipt money will be bank account debit to equity share application account. So here application and application both gets cancelled out. Let me show you how. So if you can see, we have passed 2 journal entries here. The first one refers to due entry and the second one refers to receipt entry. how the first entry that has been passed, or rather the combined entry that we have passed up there, that means bank account to equity share capital, is specifically related to application amount being directly credited to the equity share capital. How this has been done, I'll show you that. So the first original entry refers to due. Equity share application account debit to equity share capital, that has been mentioned there. On the other side, we have mentioned the receipt entry, that means bank account to equity share application. So if you can see, equity share application was debited there and then it was credited there. So debit and credit nullifies the effect. So the balance that we have is bank has been debited and equity share account has been credited here. So bank account refers to equity share capital account. That means bank account debit to equity share capital account has been mentioned, and that is the combined entry that we have passed up there. You can either pass the due entry and the receipt entry together, or you can pass the receipt entry first and then the due entry. It is all the same, only in cases where there is fully subscribed. Make sure you don't go ahead the same thing with the amount, or rather unless and until you're sure about how much amount you have actually received. If you can do the calculations very clearly, you can go ahead with the combined entry. If not, go ahead with the single entry itself, that is due, receipt, or receipt and due. Now let's go ahead with the allotment due here. So now the due entry has been passed for allotment, which is very simple. Equity share allotment account debit to equity share capital amount is 50,000 multiplied by the allotment due money, that is 20 per share. That gives you a value of 10 lakh rupees. Now, as in the question, they have not mentioned that there is any call in arrear. That means some of the shareholder hasn't paid the money. That means we assume that everything that was called for has been paid off on time. Hence, there is no calls in arrears. So the third entry here will be the receipt of allotment money, that is bank account debit to equity share allotment account. So the entry has been passed here, that is bank account debit to equity share allotment. Now the next entry will be the first call due, and then after that will be first call receipt. So the due entry has been passed, which states as equity share first call account debit to equity share capital. Now the receipt entry will be bank account debit to equity share first call, because there is no call in arrears here as well. Similar to this, we'll pass the last entry that refers to the final call due and final call receipt. Now, this refers to the last stage of case 1. So the last stage here refers to the due amount of final call, that is equity share final call account debit to equity share capital. The receipt entry will be bank account debit to equity share final call, because there is no calls in arrears, and that will embark the mark, or rather the closure of first case of fully subscription of shares. So that gives you the closure of the first case study, that means fully subscription of share. The next case study refers to partially subscribed. Now, in this case, I'm going to explain you the details what we have to take care of. Now here, the issued shares amounted to 50,000. Subscribed shares referred to 42,000. That means the balance is 8,000. So in case if there is any underwriter available with us, then that will be taken care by them. In case if there is no underwriter available in the question, then ignore this 8,000 at all. Completely ignore this. There is no reason to look into this one. So whatever amount you have received will be mentioned there as bank account to equity share application account, and then that same amount will be transferred to equity share capital, because it doesn't matter how much due was there on the application. It depends completely on how much subscription we have received. So for the first entries, that means due and receipt, or rather receipt and due of application, you will be dealing only with 42,000 shares and not with 50,000. Make sure there is no error related to 50,000. But when it comes to the subscription, or rather everything that is dealing with, or rather when it comes to allotment, you're going to allot only 42,000 shares. There is no reason that you'll be dealing with 50,000 shares here, unless and until there is an underwriter in the question who states that the balance questions or the balance issue will be taken care by him. As this is not mentioned, you'll be dealing only with 42,000 shares here. So let's start with it. So now we are dealing with the case 2 journal studies, or rather journal entries. The first entry will refer to receipt of application money. So the first entry has been passed, that refers to bank account debit to equity share application. Amount has been mentioned there as 42,000 into 25, that is application money installment. Now, the next part will refer to the same entry being moved to due amount, or rather, this much was the amount that was due. Is that what we are assuming? So, whatever amount we received in the application, we are moving it to the capital account, that is equity share application account debit to equity share capital account. Now, the next entry will refer to the allotment. Here, after any entry that you're going through, allotment, first, final call, everything will be dealt in terms of 42,000 shares and not with 50,000 shares anymore. And not with 50,000 shares anymore. So, it is only 42,000 shares that you'll be dealing with. So, the next entry that we're passing here is the due entry for allotment. So the entry that we have passed here is equity share allotment account debit to equity share capital, which refers to 42,000 into the allotment money, which is rupees 20. So the amount that we have figured is 8,40,000 here. Now, as there are no calls in arrears, this is the same amount that we'll be receiving. So the entry that will be passing for the receipt entry in case of that part is bank account debit to equity share allotment account. So the entry that has been passed here is bank account debit to equity share allotment account. And after this, we close the receipt of allotment here. Now we go on to the first entry, or rather the first and the final call. Now we'll be passing the due and the receipt entry together for this, and then we'll be closing the case study related to this partly subscribed shares. So let us pass all the entries for first and final call, and then we can discuss the amount there. So if you can see, we have passed the entries for the first call here. That means due and receipt. The entry for due was equity share first call account debit to equity share capital, 42,000 into 30 rupees per share. Amount comes to 12,60,000. And after that, the receipt entry refers to bank account debit to equity share first call. Again, the amount will refer the same, that is 12,60,000, because there is no call in arrears here. Similar to this, we'll be passing the entries for final call, that is due and receipt both. So the last entry referring to case 2 has been passed, that is due entry equity share final call account debit to equity share capital 42,000 into 25 rupees, that gives you the amount there, and that is the same amount that you're supposed to receive, 10,50,000. So the receipt entry has been passed, that is bank account debit to equity share final call. Now that refers to the total amount being received here, and that marks the closure of the journal entries for case 2. Now case 3 is a little different, so let's discuss on case 3 on a next sheet. So now when we are discussing in the case of oversubscribed, we will be dividing the page into two sides here. The first side will refer to the applied shares and the second side will refer to the allotted shares. Now, the reason why we are dividing the page into two sides is because I want to explain you how pro rata system works here. Now, applied shares refers to the total of applications that we have received here. Allotted shares is the maximum that we can allot. That will be equivalent to the issued shares. So here we know the total of allotted shares can be nothing more than 50,000 shares, as it has been mentioned in the question. However, the subscription we have received in the case 3 is 12,000 more than what we have already issued. That means 62,000 more we have received here. Now, what we are going to do is we are going to divide the 60,000 or rather 62,000 into part by part rectifications. So the first thing will refer to rejected shares. Out of the 62,000, we have went ahead or we have gone ahead and rejected 2,000 shares completely. So the applications for 2,000 shares is completely rejected. Now make sure you have a clear picture of understanding here. The total of all applications should be equivalent to 62,000. So whatever bifurcation you do should be equivalent to 62,000, and whatever bifurcation you get done in the allotment should be equivalent to 50,000 here. So make sure there is no error. Now out of those 62,000 shares or rather additional 12,000 shares, 2,000 shares have been already rejected. The balance that is additional is 10,000. So for those 10,000 shares, what we have done is that we have divided them into ratios. That means for 10,000 shares, or rather the ratio was for every one share we have allotted for 3 applied. So if you have applied 3 shares, you will get 1 share. So in that case, if you have applied for 10,000 shares, how many shares will you get is what you have to calculate here. So the ratio that we have taken into consideration is that if we have mentioned there are 10,000 shares applied, we don't know how many shares have been allotted. But in comparison to that, they have given the ratio. That means 1 share was allotted for every 3 shares that has been applied. So now it is easy for us to figure out how many shares are there here. So roughly approximation has been taken as 3,333 shares has been allotted in the case where 10,000 shares were applied. So that many shares have been already taken care of. Now there was another line mentioned in the question. That means 46,666 shares were fully allotted. So if you can see, we have done the bifurcation very clearly. That means 46,666 shares were fully allotted here. So here if you can see, we have done the calculations here. We can do a complete random check. Here if you can see 3,333 shares, that's a complete round of shares, or rather we have taken 0.333 is what it is coming to. We can ideally do one thing. We can see that you can round it off to the nearest digit so that either of the calculation can be taken into decision wise. So 3,334 shares can be taken into consideration as it is 0.333333 continuous. You can round it off, or either you can mention it as 46,667. But as in the question they have mentioned that 4,000 or rather 46,666 shares were completely allotted, we can only make the changes in the upper value there. So now we have the complete allocation of allotted shares. So as I've mentioned that the total of allotted shares should be equivalent to the total value given there. So if you add the numerical 1 and 2 that has been mentioned across the numbers, you will get a value of 50,000 itself. That means the allocation has been done in a correct way. Now, this is known as pro rata allotment. So this marks the closure of this specific working here. Now using all these details, we'll go ahead and figure out the journal entries for case 3. Now, the first entry that will be passing here is the receipt of application money. We have received application money for the whole amount, so we'll be taking care of that whole thing. After that, we'll be passing the entry for the rejected shares. So we received the application for 62,000 shares, so we have to take care of that specific thing itself first. So bank account debit to equity share application account debit, or rather equity share application account credit, has been mentioned for that many shares. Now as per the allotment, 2,000 shares were already rejected, so we'll mention that entry for rejection, which will be the reverse of this entry that we have passed. That is, bank to equity share application is what we have passed for receipt. For rejection it will be reverse. That means equity share application to bank only for 2,000 shares. So that means an amount of 50,000 has been refunded here. So out of 15 lakh 50,000 what we had received, we have subtracted 50,000 which has been refunded. So we still have 15 lakh with us. So this is the value that we still have. Ideally, we were supposed to receive an application money of 50,000 into 25 rupees itself. So that means we're supposed to receive ideally 12 lakh 50,000 rupees. If we had subscribed, or if we had subscriptions only for 50,000 shares and there was no pro rata allotment in that case, then only 12 lakh 50,000 was supposed to be received. But how much have we received here? We have received 15 lakhs in total, because 50,000 has been already subtracted, so we have received only 15 lakh right now. That means in addition we have 2 lakh 50,000 additional value which is received regarding the application. Now, when it comes to allotment, we'll subtract this much of amount from allotment there. That means in case of allotment, 50,000 shares multiplied by 30 rupees gives you the value whatever. Out of that value, whatever you're supposed to receive as due, you will subtract this much of money, because this refers to the application money that you've already received. So in allotment, you're not supposed to receive the complete amount, you can adjust it there. So this is called adjustment there. So ideally in terms of allotment, you're supposed to receive 10 lakh rupees. Now you additionally have 2 lakh 50,000 which was received in terms of allotment, or rather in terms of application money. Now instead of 10 lakh, you will receive 10 lakh minus 2 lakh 50,000, which gives you a value of 7 lakh 50,000. So you'll receive only 7 lakh 50,000 here. So if you can see, 10 lakh is the value that you're supposed to receive, out of which we have adjusted 2,50,000 of equity share application. So the balance amount that you're supposed to receive, or that we have received ideally, is only 7,50,000 here. Now, after this, everything remains the same. That is the first call due and the final call due. So let's pass the entry and mark the closure of that sum. So the first call allotment, or rather first call due and receipt, has been passed here. Due entry refers to equity share first call to equity share capital. And that refers to 50,000 into 30, that is 15 lakh rupees. And the same amount we have received here, bank account debit to equity share first call. Now again, in equity share final call, we have mentioned the due amount, that is equity share final call account debit to equity share capital, which is 12,50,000, and the similar amount we have received here, which is again 12,50,000. Now, this marks the closure of this specific illustration. Rather, when we have discussed that the oversubscription, undersubscription, and full subscription can be detailed, or rather can be mentioned in all these specific manners. I hope this video has given you a clear idea about how pro rata is supposed to be dealt with. Every time the working has to be done, the working has to be done in that similar way itself, which has been taught right now. So, thank you for watching this video. Stay tuned with Ekeeda and keep subscribing to Ekeeda.